Imagine this conversation. The advisor asks, if your portfolio goes down by 20%, how would you react? The investor confidently replies, no problem. I know equities are risky. I can take the hit. But when the portfolio dips just 5%, panic sets in. The advisor's phone rings. What's happening? Why didn't you move me to cash? Sound familiar? This is one of the most common patterns in investing, and it reveals a deep truth about human behavior. When markets are calm, we all like to believe we're rational. We tell ourselves, I can take the risk. I'm in it for the long term. But when the red numbers start flashing on our screens, emotions overwhelm logic. Suddenly, our risk tolerance vanishes. This disconnect between what investors say and what they do is the essence of loss aversion, a cornerstone of behavioral finance. Loss aversion means the pain of losing money feels about twice as strong as the pleasure of making the same amount. So, while we may be happy when our portfolio goes up 10%, we feel devastated if it falls even by just 5%. It's not that investors are weak, it's that our brains are wired to protect us from danger. In ancient times, avoiding loss meant survival, but in markets, this wiring leads us astray. That's why investors who confidently declare, I can handle a 20% drawdown often crumble at 5% loss in their portfolio. Loss aversion is the reason. Investors pressure advisors to time the market, shift to cash, or abandon well-laid plans. And here's the irony. In trying to avoid small losses, they often lock in bigger ones, selling at the bottom, buying back too late, a cycle of fear that erodes wealth. The gap between what investors say and what they do is not hypocrisy, it's human psychology. Loss aversion is powerful, but it doesn't have to control you. By understanding this bias, setting rules, and giving yourself space to think, you can stay true to your long-term plan. Remember, in investing, it's not just the markets you need to manage, it is also your own emotions and biases. Subscribe to Financial Freedom with Benis Kumar Moses for more insights on how behavioral science shapes money decisions and how you can turn psychology to your advantage.